This week, Mike Privette from Return on Security is with us to discuss the 2024 cybersecurity market highlights. Then Rue Islam from Dashlane joins us to talk about passkey portability. Finally, in the enterprise security news, Snowflake takes security more seriously. Microsoft takes security more seriously. U.S. government takes telecom security more seriously. Clio Capital takes security more seriously. We're very serious here in December. EU's DORA takes effect soon in the new year. Is phishing and security awareness training totally worthless? CISOs need financial literacy. Supply chain firewall is basic but useful. All that and more on this episode of Enterprise Security Weekly.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network.
It's the show where we talk security vendors and aren't afraid to name names. It's Enterprise Security Weekly. Graylog elevates enterprise-level cybersecurity through its comprehensive SIEM, centralized log management, and API security solutions. Built on the Graylog platform, Graylog Security combines SIEM, security analytics, threat detection, and incident response capabilities. Unlike traditional SIEMs, which offer complex and costly setups, Graylog Security simplifies security and operational challenges with an optimal blend of licensing, people, and infrastructure costs. To see a demo, visit securityweekly.com/Graylog. BigID is the leading data security posture management, or DSPM vendor, and they do DSPM differently. DSPM centers around risk management and how organizations need to assess, understand, identify, and remediate data security risks across their data. BigID seamlessly integrates with your existing tech stack and helps you uncover dark data, identify and reduce risk, take action through remediation, and scale your data security strategy. BigID is reshaping the future of data security, and CB Insights named BigID the leader in DSPM and the most disruptive cybersecurity software in the space. Visit securityweekly.com/BigID to learn more. Welcome to Enterprise Security Weekly, and happy Build a Gingerbread House Day, where millions of folks will build a gingerbread house, never eat it, just let it sit there, harden, and grow mold. This is episode 387, recorded on Thursday, December 12th, 2024. I'm your host, Adrian Sanabria, and joining me is the connoisseur of cloud security, our single origin co-host and resident coffee sommelier, Ayman Elsawa. How you doing, Ayman?
Hey, Adrian, how you doing? I'm on location in New York.
I'm doing good. My kids, they go to Target, they get the gingerbread house kit. I don't think anyone's ever tried to eat any of it, so for all I know, it's not even edible. I don't know, but I've never seen anyone eat a gingerbread house.
Yeah, I just go for the icing.
Don't even put it on the house. Just eat it straight out of the packaging. All right. Today, we're doing the 2024 Cybersecurity Market Review. This will be the second year now that we've done this. We did this with Mike last year. And we're excited to have Mike Privette, founder of Return on Security, with us today. Mike is the industry's first, I assume this is self-proclaimed cybersecurity economist.
Yes.
And he
totally self-proclaimed.
And he pens the weekly security-funded newsletter that this podcast has leaned heavily on in the past for funding and acquisition news. Welcome to the show, Mike.
Hey, thanks for having me. Good to see you both here.
Good to have you. This podcast started out with actually when I took it over. For a long time, it was me, Tyler Shields. Katie's still with us. Katie Teitler-Santullo, but we were all analysts. So, it was very easy to get kind of sucked into the market analysis because that's what we've done. And even after each of us have stopped being analysts, and Tyler actually left the show to become an analyst again over at ESG, we just can't turn it off. We're just so interested in who's getting funding, where that funding is going, who's getting acquired, talking about what ARR might be. And it's just, security moves so quickly. Those of us with ADHD, I think it's just just a big bucket of dopamine, to because something's always happening. Somebody's always getting acquired. Somebody's always getting funding. Before your newsletter, Mike, I never knew that half a dozen MSSPs were getting bought and sold on a weekly basis, right? Like MSSP that just serves the North Island of New Zealand, right? There's so many little regional ones out there. Is that something that was kind of a surprise to you before you started to dig into it?
Yeah, it really was. To be honest, I had no idea how much services played a huge part in the industry. We always hear about the really big companies, really big product companies who are making the cutting edge of cyber and breaking ground on like new threats and new research. But you don't realize that more than half the industry is actually run by services businesses. And so I was very surprised to see how quite large some of these MSSPs or service businesses have gotten, and how many companies they go on an acquisition spree acquiring. I think so far this year, there's one MSSP that's acquired like 6 different other MSSPs. Just like the same one keeps acquiring more and more, so they have quite the M&A strategy. So it's a very common part of the industry.
Yeah, for sure. And it's and then we, over the years, where I kind of want to start out is with more of a macroeconomic view of the market. Certainly the larger market outside of cybersecurity had a big impact on a lot of things, right? Like a couple of years ago, I think it was 2022 when we saw the market drop out, and we had a category. We even had on-screen graphics. That Sean and Alex would throw up for unicorns. And I think we even made a decacorn one, because every month there was a new cybersecurity unicorn, or bigger even. Wiz got to that 10 billion valuation mark. And then it just all stopped very abruptly, I think June 2022. And that same month, I think Cyber Reason had their first layoff, and then OneTrust laid off like 1,000 people, and we were like, "Oh damn! Like, where is this going? What's happening here?" So I've got a graph back from 2022 that shows both, the unicorns, the total count of cybersecurity unicorns stopping abruptly, and then those layoffs, big line of those layoffs starting, and we're still seeing layoffs today. So maybe that's where we start. Like, how much have we recovered, and do you have a general sense of whether we're back to some semblance of normalcy, or is there not a normal anymore?
Yeah, I think we're still trying to figure out normal in general, but I would say 2024, it's shaped up so far to be a lot closer to normal, but not normal as in the 2020 to 2022 period, but like normal as in like 2018, 2019, that sort of range, where there's still a significant amount of funding, but not nearly like the highs you would see, and not nearly as many overvaluations, and not nearly as many super mega rounds that you would see even at the early stages. It does still happen some. And to be honest, a lot of that's been fueled by AI spending in general. So a lot of AI security or AI governance or AI privacy type companies have come out of the woodwork this year, just because AI is lifting all tech at the same time. So there's definitely a tailwind on that that's propelled the industry a good bit. But it's, even in general, even if you remove AI spend as like separate like category creations, it's still normalizing, I would say, from 2023, from the height that we saw in 2022, where things just kind of fell off. So I'd say that was probably the worst. That was the top, and then also subsequently the bottom, and now it's kind of rebounded back up, such that 2024 is actually pretty closely aligned on like the distribution of funding and acquisitions in terms of stage, in terms of company makeup, and overall like dollar amount as well.
Yeah. Wherever it makes sense, I know you have some visuals. Feel free to throw those up. For people watching, I think about 70% of our audience watches, whereas 30% you're listening to an audio only version. So we'll try and somewhat annotate what we can see that you can't see. But this is what Mike has thrown up here is a really good, just simple bar chart split out by early stage, late stage. Different funding stages, and then 2022, 2023, and 2024. So clearly, 2022 was just like the year, even though that's where the bottom dropped out, still it looks like we had some record numbers in funding rounds then.
We did. And honestly, most of that was in the first half of the year. So if you can believe it, the year it still finished strong if you compare the end of 2022 to 2023 and 2024 kind of averages over quarter. But most of it was like just shoved in the first 1 to 2 quarters. And that was really just coming off the absolute highs of 2021, which was also record setting from 2020, which was also record setting from 2019. So you could see the momentum, and then interest rates skyrocketed, layoffs started happening like crazy, and then everyone got a lot more cautious with capital deployment, and everyone tried to hunker down and say, oh my gosh, we have to conserve money now and cut costs, which was something that frankly the industry had not heard in probably the past 10 years, like in general, like practitioners and startups as well. But yeah, this I always like this chart just because it just kind of simply shows what's happening, but also you can see a little bit of changes here as well. So they may look small, but it's in some cases it tells like a pretty nuanced story. In some cases, it's what you would expect. So, for example, you would expect in our industry most investments by volume go into early stage companies. Like it is an industry that regenerates itself many, many times over throughout the year, not just from like a marketing perspective, but from like an actual technology evolution and like threats advancement, because we have all of those outside forces from threats and regulation kind of pushing us to the ends. So there's, and this is only to 2024 to date. So this is as of the day we're filming this. So all the data is not in yet. But what's interesting to me is that 2024, as you can see in the second layer, has seen a noticeable increase in late stage cyber companies. So for me, I kind of group late stage into a couple different buckets, but it's those larger and later rounds, like Series D to Series E, or even G and F, or F and G and H in some cases, large private equity rounds, secondary market kind of rounds. Those things are typically much larger in general. So like you're talking 100 million to like 300 million and greater. And
like Fastly just had a big one, right?
That's right. Yeah, and so they've been around for a long time. They've raised a lot of money throughout the years. So when you see late stage rounds happening again and coming up, that really brings the overall total up. But it also shows a bit more health in the market there too, because now those companies have survived effectively through this tumultuous time. They've been so now they're ready to either start buying more companies or start building into new markets. And so it's a pretty interesting kind of shift where we saw like a total drop off of that in 2023 and especially in the middle and the growth stage rounds as well, which are like that Series B to like Series C or corporate round style levels. So it just tells kind of an interesting story along the way.
Yeah. So for people that can't see what we're looking at, we see a general drop off from 2022 through 2024 on early stage, from 435 funding rounds in 2022 to 299 in 2024. Similar motion in the middle stage, but then late stage doesn't look really affected by any of it. It looks like it's pretty steady through all 3 years.
Yeah, it's pretty evenly distributed, like 60 to 70 transactions per year. The middle and growth stages from 2022, which was about 258 different transactions. Those are the ones that struggled the most. Like the companies who received those funds struggled the most to like kind of survive, because they had typically had taken in a massive amount of money and far too high valuation that they then had to grow into or downgrade, which no one likes to do. So it's interesting to see it kind of 2024 be a bit closer to 2023 and up in some places and down in others. But overall, like the year is actually trending to be a higher year in terms of dollars exchange. So not just on the funding round front, but also on the M&A front. And so that's a positive sign, I would say, for the industry overall.
Speaking of M&A, Eamon, I know you wanted to know about that. Do you have a slide for acquisitions?
No, I don't have one of those yet, but I can give you some raw numbers on those.
Okay.
Yeah,
Just curious. Yeah, what was your question there, Eamon?
just what were your reflections, Mike, on all the mergers in the past year or lately?
So honestly, it was I think it was another good sign. It was the year of like the large incumbent players who've been around for a long time, just trying to really buy into that platformization kind of dream. Of the one platform. You see like a lot of larger companies, like later stage ones, acquiring these companies that are in this like early to middle growth stage rounds to leapfrog some innovation. So you saw a lot more of those this year. And last year's 2023, there were like 258 acquisitions for about 40.5 billion. This year, just years to date, as a day of recording, there's already been 256 acquisitions at 41.5 billion. So it's already $1 billion up, and the year's not done yet, and there's still more coming on.
And probably should put an asterisk on that, in that we don't know a lot of the acquisition prices, right? Like that's 100%. Just what we know. Yeah.
Exactly. Yeah. And actually, probably about 80% of the M&A deal flow in general is completely undisclosed. Like this is just accounting for what's public and what's been publicly released and shared, which is typically one product company buying another product company.
Yeah, so one of the predictions we made on this show was that a lot of companies wouldn't raise another round. They would have difficulty raising another round. And we were even making those predictions before AI security became a big thing and like stole all the attention away, right? Like now, not only was the financial market, was capital not free anymore, all the VCs were distracted, right? They had to get something that says AI. And now I joked on LinkedIn last night that the new requirement is agentic. You have to have agentic somewhere in your pitch to raise money. That's the new requirement. Did you see a lot of that? A lot of companies who maybe would have stuck it out longer if they could raise another round, but had to sell. Obviously there's the ones we know about, like Cybereason and TrustWave, which seemed like a weird pairing, but certainly they lost a ton of value. But were there more smaller ones where we maybe didn't hear the details? Do you have a feel for that?
Yeah, so I think there were quite a few companies who opted for a kind of strategic acquisition. And from what I've been able to gather and just like anecdotally this year, a lot of people were looking for like acquisitions of more like IP as opposed to like a specific product that a company may have had or a specific team. So companies, the window to go IPO has become increasingly hard ever since the 2022 like downfall. Only Rubrik went to IPO this year in cyber, and that's cyber adjacent for many people.
Right.
So the prospects of like sticking it out for the long haul to become like a publicly traded company is becoming less and less possible and less appealing, to be honest. So companies we're looking for strategic acquisitions to either free up to founders and teams to go work on their next big idea, or to try to build something brand new. So I think that became more of the norm, and I think that's why we saw more activity on the M&A front this year, and I think that'll continue into 2025 as well.
Now, jumping into some of the category trends here that we've seen, AI is the obvious elephant in the room, and I think you have some numbers, because everything always seems bigger than it really is, right? We're hearing about AI more than anything else. It feels like there should be at least 36 replace a tier of the SOC with AI companies out there. But how big is it really? Really interested to look into this.
Yeah, so I pulled out AI security spending from all of the transactions I've been able to capture for the last 2 years. So it really became something that people started investing in last year, AI security in general. And that's a super big bucket, I know, which is actually something.
Is this buyer spending or is this funding?
Sorry, this is funding.
Okay.
Yeah, there's I haven't seen any good data on like what buyers are doing on this front, because the challenge with the AI security wave, or
they're
AI
all
in general,
portfolio companies. They're not actually using the product.
Yeah, there's that. But then AI has been baked into so many things. Like you can't really account for like the economic impact of like how much money has been invested in AI on either side of the equation.
True.
Because there's AI companies, there's AI products, there's AI
features,
enhanced products and features. There's things that just call to ChatGPT under the cover. And so like there's all these different ways to spin it. But I kind of grouped the categories up into three kind of key areas for the broader AI security of funding. And this includes security for AI and AI for security. So that your SecOps, your AI chatbots, your AI SecOps bots that do that as well. Your red teaming of AI models and all of that. And you can see a pretty noticeable uptick between the 2 years. And year one, it was basically just artificial intelligence security and then some privacy assurance. So like when I say privacy assurance, I mean like making sure you're not putting like confidential data into large language models, or you're not leaking IP out to your company.
Those seem like they're mostly data security solutions. Like the AI is more the use case than like they're not actually doing anything with AI.
Yeah, a lot of them are like just like they're like effectively like CASB products. So like they're preventing like access from sanctioned versus unsanctioned AI applications or SaaS apps, or they're preventing you from uploading credit card data or social security numbers or things like that, or like they're sanitizing prompts as you a person sends them in, so you don't accidentally send in confidential data or violate privacy regulations.
And one of the things I've been wondering here is like why can't a SASE just add that as a feature, right? Like a lot of these, I mean, it is pretty typical to have security startups that are clearly features, launch as a standalone product and eventually get acquired and become a feature in a platform. But some of these really like even some of the governance ones, it's like, isn't that just a category, a new content category within, my, what is it, App ID in Palo Alto, right?
Yeah, no, I think it very well could be, and I think we're seeing a lot more people do that now. So, like, if you look at like Zscaler, Palo Alto, or others, like they've all kind of like, grown a lot this year off of AI security use cases, and like that's like a great example of one. And some of them are, more browser based kind of things that should be rolling up into other like broader kind of functions. And so I think we'll see a lot more narrowing of what does it mean to operate in AI security in general next year from the cybersecurity market. Like I think we'll actually see things get a lot more specific and a lot more data on the use cases. But if you look at the overall kind of spend here, and like I broke this out, I'm showing a chart now that shows just kind of like AI security spending or the broader categories of AI security funding between 2023 and 2024 year to date versus like the rest of the cyber industry. So
1.35% in 2023 and 2.77% in 2024. So a small chunk, but it's a very in-your-face kind of vocal, noisy chunk, right?
It is, yeah. So it kind of helps you remember, like, well, there is a lot of hype, but there's still an incredible amount of money being, invested in lots of other segments. Like if I were to do the same evaluation on like the broader like data protection or data security or backups or resiliency space, I think those numbers would be much, much higher. And I think what's also kind of missing or like, you have to tease out is that so much of this other categories have grown as a result of AI. And so more AI drives more cloud compute, cloud compute drives more apps, and then more data. And so then you've got to secure the data. So it's like it's a very neat, process that just sort of like flywheels itself.
So to kind of flip the numbers here, put it a different way, over 97% of funding in 2024 was not for AI related stuff.
Yeah. So not like an AI security product company. And, I've not seen any hard details on if you zoom back out and like all of tech and all of AI. Yeah, I think it's the numbers are roughly similar, like
Oh,
proportional. Like
really? Okay.
it's a bit higher, but if you look at it's over $1 trillion that's been invested in like global like funding around the world of kind of all categories, and then you zoom that into just technology, you've got a few hundred billion, and then zoom that into just AI. So it's interesting to see like how it's kind of growing in a similar rate.
I think AI governance and privacy is going to balloon in the next few years. Particularly, what I'm seeing is because large enterprises have been slow to adopt AI, and so when they want to start adopting AI, I think those numbers are going to start increasing. So there's a little bit of a lag there. It's pretty interesting.
Yeah, I think they're true, and I think you'll see a lot of that come out in terms of DLP and data protection getting a bit more refined when it comes to AI, and those always have privacy and governance kind of use cases like just embedded in them.
Yeah, so let's move on to the future here. We've only got a few minutes left. It seems like this has gone really fast. I think we've touched on all your slides that you prepared, all the stats.
Yeah, and I will be sharing a lot more stats. So this is just like the start of.
Yeah.
I'll do an annual.
You get a whole
reports.
report, right?
Yeah,
You're doing.
It's my like crazy mind map thing that I got going on, and yes, I'll share that later.
So yeah, the thing that we keep hearing about and that people keep asking is what about the IPO market? And I keep wondering, like I keep looking at companies like Netscope and thinking, is IPO even attractive? Like I don't think we've ever seen more cybersecurity companies go from public back to private. Either take private or they went public via SPAC, and it just everything went wrong for them. But so maybe two questions there. Do you see cybersecurity IPOs coming back in 2025? And should it? Is it even a good idea? When clearly, like Fastly can always raise another round. I'm sure Netscope can always raise another round and stay private.
Yeah, and I think one way to look at that too is like if you look at the secondaries market, where people selling like private shares, and that has been on fire for many companies who are not public these days, and that's a great way to get liquidity exchanged out, and a great way to just let the company continue operating. And so it's something that I think going IPO, because it's been kind of off the table for so many companies for now a couple of years. And people have just kind of learned to operate without it, because when you do go IPO, obviously you have a whole lot of a new set of eyes and expectations and regulations that go on top of this. And now the requirements to get to IPO, to get to the point where bankers are happy to post a tender offer and people want to do this, it's gotten, the bars come way up. And so you have to ask yourself, like, is it worth the best outcome? Yeah. Is it worth it? I don't know that we'll ever see it as like the old days of like IPOs, where we'd see like 3 or 4 cyber IPOs a year. I think those days are probably gone, at least for a little while. But I think a lot of companies also have just kind of realized that a take private or even just an acquisition to a larger PE firm can be like a great outcome. And honestly, if you look at like even further in the cyber industry in general, like private equities have always made the most money when it comes to cyber companies, and will always continue to make the most money when it comes to buying and selling. So they're very good at it. So I don't see that going anywhere anytime soon. And so I think they'll continue to see like PE firms buy them up and pass them on, and rinse and repeat. So we'll. I've also heard about companies who went public, went private, possibly going public again, but I don't really see. I don't really know if that's going to be the norm, if that's just like speculative.
Yeah, that used to be one of the typical PE outcomes, but these days it seems more PE selling to another PE.
Yep, exactly.
Yeah. And it's and we've seen some interesting stuff like some of the ones that are public, the CrowdStrikes and the Palo Altos, even Fortinet seem to be kind of flourishing there. And we've seen some they've been very active with M&A. And I think the one that really threw me for a loop was IBM's deal with Palo Alto, like buying another product to shut it down. Like that. Is that like a market maturity thing? Like I'm not used to seeing that in cyber. That's something that we tend to see in other markets. Where you maybe buy a competitor just to shut it down.
Yeah, I think that is like kind of a sign that, like, especially on the later stage, that they've been around, have pretty mature products for a while. So especially if it's somebody you're going kind of like, you're not winning the market, like that's why you would buy one of those. Like you would just kind of take them out of business, take their IP, or perhaps buy them for contracts and just shut down the rest of the business. I think the ones who are winning are like not having to have those kind of strategic conversations. They don't need to buy their next closest competitor to do that. But yeah, I think that's there's been some unusual mergers. There's been some unusual kind of deals. And then there's just been some, the usual kind of like, oh my gosh, I can't believe how much money that company got acquired for after only being around for like a few years.
Yeah.
So I think that'll continue.
Or months.
The last one. Yeah, or months, or like, hey, we only have we have a pitch deck and $130 million raised, and that's it. And so it's, there's some pretty interesting, that's pretty unique to our market, I would say.
Yeah, it's looking like maybe Sierra is the new Wiz, growing at ridiculous rates. Speaking of which, who, if we do see any IPOs, who's on your short list there?
Well, I think you obviously have to talk about Wiz, just because they've kind of just done a masterclass of like controlling the market and the messaging all this time, making you believe that they stiff-armed Google in the last minute. And but there's been several that have been kind of like in the lurches. Arctic Wolf is a great example. Cato Networks is another. Netscope is another. These ones that have been around for a long time have huge market presence and like kind of staying power, and who are active on the M&A space too. They're just kind of ready to go. So I think we might see maybe 2 or 3 next year, but honestly it all depends on the regulatory climate. Because for the past several years in the U.S. there's been just kind of a lack of desire to do M&A at the administration level. And I think with the new administration that may get loosened up. And I think with that, more deals will get made, more funding will get made, assuming interest rates and economic things stay in check more globally. I think that'll be like kind of a positive signal for the rest of the market.
Mike, just one last thing on the IPO thing. I mean, at what point sometimes investors want their money back. And so,
sometimes it's true.
Yeah. Do you think like companies will be forced to IPO? I mean, how long can they keep waiting? I'm just curious on your thoughts on that.
Yeah, well, so it actually is a case of ServiceTitan, who is actually basically took a poison pill with their funding round a couple of years back. That they had to go IPO by a certain date, or they had to pay their investors X amount of money.
Wow,
it's very.
That was like written into the contract.
Yeah, and so they're on the ticking time bomb. That's super unusual. But if you look at the secondaries market, you can see that investors do want their money back. They had some liquidity timed up, so that's why people are going up and say, "Hey, let's sell these shares on the secondary market," or it's also not uncommon for one VC to invest and say, "Hey, I want money out. I got to pay my LPs or my investors. Who wants to buy me out?" And then swap them in and out.
I got to go fund some AI.
Yeah, exactly. It takes money to make money, and they spend it all. And so that's something you will see. But yeah, traditionally people want, investors do want to get it back, and they will lean on, like the LPs, the limited partners will lean on the VC funds themselves to do some sort of distribution from the rest of the other investments. So they hope at least one of or several in the fund that they invest in can give them some sort of liquidity. So you see a lot of like kind of push down on that, saying, "Hey, what can we get some returns?" But it's definitely not good if you get in a situation where they force you to give them returns or force you to go IPO.
Yeah, Eamon, if you want to take us out with your last question here.
Yeah. Mike, so what's next for you? What's next for Return on Security in 2025?
Just more data, more sharing. I've really kind of doubled down on that in 2024, and it was a good response. So I want to do more of that. I wanted to write a lot more. I want to speak a lot more. So I'm trying to go around and do some in real life speaking at conferences and such. So hoping to go on that, and then just always looking the way to kind of like build out additional kind of brand and streams outside of just the newsletter and whatnot.
I was shocked at how many podcasters were at the Cybersecurity Marketing Society conference. And I was having a little bit of FOMO there, like Mike Bittner, Paul Asadorian, David Sparks, all those folks were there. So I didn't realize that was the place to be. So I might check that out next year. That just happened last week, I think.
Yeah. I would say that broadly, like those that new media wave of people who are doing like podcasts or some sort of content is growing a lot. It's definitely stuck around. So it's no surprise they're growing, and a lot of people like want to see and hear more of that kind of stuff.
Right. Well, good stuff. Mike, thank you again for coming on Enterprise Security Weekly and giving your year roundup. The market roundup is a lot of fun to do.
Awesome. Yeah, thanks for having me.
Stay tuned. When we come back, we're going to talk passkey portability with Rue Islam from Dashlane.